Hello and welcome. Today in this video we are going to analyze S&P 500 with the ticker SPY and also QQQ. None of the content is financial advice. Right now the price of SPY is at around $681 and the purpose of this video is to look for any regression and machine learning based analysis of where the price is, and using regression based color codes identify if S&P is fairly valued, undervalued, or overvalued. Let's get started. So the current price of SPY ETF is at around $681. It's above the 20-week simple moving average and the 21-week exponential moving average, which are between $657 and $660 respectively. The 50-week simple moving average is at $615. So above all of these key averages, whenever the price is below the 50-week simple moving average, again that is usually the price has dipped significantly. If you look for this data point starting February 1993, if we were to analyze what's the growth of the index and if it's significantly undervalued or overvalued, these regression based color codes help identify. Right now the regression based risk is at around 0.36. The fair value of SPY or S&P 500 is at around $791 per this polynomial regression based model. This model says that again there are periods of the market in the market when the price goes through overvaluation and undervaluation. This is using 4 degrees of freedom. So 4 degrees of freedom to the upside to identify any top than predicting the bottoms. So if using this model, whenever the regression based risk, let's say if we have a cutoff point, whenever the risk is less than 0.2, DCA at that point, usually again historically speaking, eventually does work out. So for example, in the last 4 to 5 years since the March 2020 drop, which was again dropped at around 0.25 risk, also in October 2023 the price was in this regimen between 0.2 and 0.3, slightly higher than that. And again in March to about March 2025 to about May 2025, the risk for S&P in November 20th November 2025 was also in 0.3 to 0.4 at that point. So now the regression based risk is slightly higher than that. What is again a key to look for is whenever this prices of S&P is below this dotted green line or significantly close to the dotted green line, that's when again major dip buying or any major DCA opportunities occur. Again, as this asset has been around for multiple decades, having a longer term view usually works out for S&P. Similarly for QQQ over here, which is a Nasdaq Invesco Trust, again it tracks Nasdaq since about 1999. The same regression based model said that again right now the risk with respect to Nasdaq has been elevated now to about 0.57. So if for this again similar regression based analysis, whenever again we look for confluence, whenever both S&P and Nasdaq are in this downtrend, especially Nasdaq being slightly more volatile than S&P, whenever Nasdaq has been less than 0.2 risk, like it was in May 22, starting May 22 till October 2023. This time around again in the drop of 2025, the Nasdaq only went as low as about between 0.2 and 0.25 to 0.33 risk. These risk levels again are not perfectly normalized, just to accommodate for any rounding off related analysis. So now especially with respect to QQQ, the regression based risk level at around 0.3 provided a guidance. Right now the QQQ is also at around $614 to $615, slightly below the Nasdaq, slightly below the S&P, which is at around $682. So there is some some room for it to go back to its, if there is a correction in 2026, the fair value for QQQ is 470 per this model. Again, any opportunity below 470 and slightly below that could constitute a similar dip buying opportunity in mid to late 2026. If on the other hand, if we look from a topping pattern before before there is a downturn in 2026, if there is a downturn in 2026, the ceiling established by this 2 standard deviation residual to the upside for the polynomial regression model is at around $700. So that's one area where where QQQ could go. That is about $85 or about 15% higher than the current price, which is at around $600. So that's one ceiling to look for in terms of hitting that ceiling before calling it a bear market. In terms of what the theoretical max level, if let's say the $700 level for QQQ is somewhere at around 0.75 risk. If we go somewhere close to 0.8 to 0.85 risk, that is cutting really close to the end of the market cycle or business cycle, between $750 and $765. That's the max permissible ceiling for QQQ. Coming back to S&P 500 over here, this is our website, link on the bottom of your screen. It has lots and lots of crypto related content. Today we decided to make a video related to S&P. We do have other analytical models such as machine learning based price analysis for S&P and QQQ, which we will be making in the next week or so. Today we focus on the DCA side of things more. Coming back to S&P and its own DCA model, again, what we see that S&P has had less volatility, and again also if we look for any dip buying opportunity below the gray line over here, they have eventually worked out again since about March 2009. So about 15 to 16 years, S&P has been in a steady bull run. If that bull run were to culminate, one key area to look for is again at 0.3 to 0.4 risk at around $800. Between $800 and $888 is what the 0.3 to 0.4 risk says. If there is a major peak in let's say early first quarter 2026, that could be a key level to watch for the risk based estimation. With that, I'd like to conclude the analysis by saying again, these individual models, again, as used in Confluence to identify some of the older assets which have been active for multiple decades. They provide a lot of data points. When this is again at a daily level, you can see that these kind of analysis, again, although was not available in 2000s, but did identify the 2 standard deviation overvaluation phase. And then again, similar story when the price was quite undervalued in the recession of 2008 to about recovery to 2011. Since then, S&P has rarely looked back to those regression based channel again. The last time it hit the channel was in April 2025. Before that, definitively in March, April 2020. With that, like to conclude. Hope you enjoyed the content. By the way, all of these charts are available on the website linked on the bottom of your screen. No signups or anything required. Also, if you like this kind of content and want to stay updated, you can check these work out. Again, this is again our 4th year as a YouTube channel. You can check our videos and our historical record on YouTube itself. Over 1,000 videos made on this channel. And again, hope you enjoy the content. If you did, give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.